Hi, this is Phil Chandler with LeBlanc and Chandler CPA. Today we're talking about just some basic deadlines that are coming up in 2018 to comply with those 2017 tax returns and a few other issues that IRS or Social Security are requiring. So let's dive into it. We're just going to talk about a few brief deadlines that you need to make sure that you're aware of. The first one is January 16th, which actually happens to be today. And that deadline is for fourth quarter estimated tax payments. You see, if you're a self-employed individual, in other words, you get your income from a partnership or an S corporation or sole proprietorship or possibly a different type of LLC, then you're getting your income that's not been taxed at all. So basically the IRS, and rightfully so, says, all right, you haven't been paying us taxes every time you get a check. So we want to be paid our fair share of the taxes on a quarterly basis. So January, February, March is April 15th, and then the next quarter, and then the next quarter. Well, the fourth quarter comes up, which is October, November, December. And what they say is January 16th, 2018 is when we want our fair share of the earnings from that fourth quarter. So this is not a tax return. It's not a reconciliation. In other words, there's not a formal report that needs to go to the IRS, but basically they expect a payment on their share of taxes due for income earned in that fourth quarter. You can make those payments basically through two different techniques. One is you can send them a check with a voucher that you can print out that basically says, here's $1,000 for my fourth quarter, here's my Social Security number or EIN, here's a payment to you. Or you can actually go to irs.gov and make a really quick payment by putting in some basic information such as your Social Security number, tell them what you're doing it for, what you give them some money for, obviously, which in this case is estimated tax payments is one of the drop downs. So you can give them some money different ways. But basically January 16th is the deadline for giving them their fourth quarter estimated tax payments. Now, if you don't give it to them on the 16th and you forget, whatever, and you give it to them on the 17th, not the end of the world, because it's not like there's a giant penalty incurred right at the 16th. What happens is they basically say they're expecting this portion of your taxes due on the 16th, so interest starts accruing. And it's not a great deal, but still, it's not anything that you want to pay if you don't have to. So estimated tax payments for the fourth quarter due January 16th. Now let's look at the end of January, which is probably the most important one in my opinion, at least initially, is a couple of things. One is W-2s. So if you're an employer that has payroll people on a payroll, not independent contractors, then you've got to give each one of those employees a W-2. The W-2 basically looks like saying, here's my gross wages that I paid you. Here's the federal withholding, Social Security, Medicare that I've taken out in addition to whatever else, health insurance or some other stuff. So the W-2, you have to get that to the employee by January 31st, or there is a penalty. But in addition to that, and what's changed this year from previous years, is that you had a little bit more time to get another copy of that to the IRS, or really it's to the Social Security office. What they're saying is this year is that you've got to actually pay, you've actually got to report that on January 31st. So not only on the W-2 you got to give it to the employee, but also on January 31st you've got to give it to the IRS or Social Security. So that's a reporting responsibility on every employer that has a employee. You've got to get those reports out on time by end of this month. And then another one that's just as important actually is a 1099 miscellaneous form. There's other 1099s, but actually the 1099 miscellaneous is the one that's most important. And that's because that's the one that you use for anybody in business that basically has paid somebody some rent, like a landlord, or you've paid a contractor for services that they provided to you in excess of $600 for the whole year. So if you've paid somebody $750 because they came in, painted your office lobby, you've got to give them a 1099 miscellaneous. Or if you're renting your building and you've paid a landlord $12,000 for the year, you've got to give him a 1099. Now, I get the question all the time because people are constantly getting feedback from people that say, I don't need a 1099, I'd rather not have one. They don't have a choice. It's your responsibility, according to the IRS, to provide a 1099. And it comes in two forms. One is you've got to give the 1099 miscellaneous to the person you paid, but in addition to that, you've got to give a copy of that 1099 to the IRS. No big surprise there. Basically, that's one way of many ways that the IRS uses to track people on whether they're reporting all the income that they've earned for the year. So obviously, if you're paying the landlord $12,000, and then you give him a 1099, and you give the IRS a 1099 that says, I paid that guy $12,000 for the year, the IRS will use that to be looking for that landlord to report that rent income that you paid him. So obviously it's a check and balance kind of thing, but it's not anything that you have a choice on. You're required by the IRS standards to create that 1099 and give it to whoever you paid, and also give a copy to the IRS. That's also due on January 31st. And then the last two items that I mentioned on there is 941 forms and 940s. Those are payroll quarterly reports that you have to give to the IRS every 3 months. That basically says, here's all the people I've paid on payroll. Here's the payroll tax deposits that I've provided, and everything else matches. So it's kind of a quarterly reconciliation of payroll that I've paid, payroll tax deposits that I've made. So the 941, basically for the October, November, December of 2017, is due January 31st of 2018. You're reporting to the IRS, here's all the wages I've paid, here's all the taxes I've withheld from their paychecks, and here's how much it all reconciles out. And then a 940 is same kind of format, except 940 is federal unemployment tax report. So same kind of deal, because there's a different calculation on the federal unemployment. But those two reports are also due on January 31st. So that's an important day. And on all four of those, if those aren't provided to the IRS and to whoever else is due those reports, penalties can start accruing on the employer. So they're important reports and not something you want to take lightly. All right, so let's move to February. Hey, free month. That means Valentine's Day and all that stuff, you don't have to worry about taxes. But the next month, tax returns start kicking in. So March 16th, 2018. This is when the first two tax returns are due. So S corporations, which is the Form 1120S, and partnership tax returns, which is the Form 1065. Both of those are due on March 16, 2018. Now, of course, if you don't actually turn in the tax return, you need to turn in an extension. You got to turn in one of those. If you don't, there's serious penalties that start accruing, and it adds on month to month to month, so it doesn't go away. So the S corporations and the partnerships, they're called pass-through entities. In other words, they don't pay taxes to the federal government. They pass those taxes to the individuals that own those entities. But it's still important that you file the tax return. So S corporations, partnerships, March 16th, 2018. And the reason that these are March instead of April, roughly 30 days prior to the April 15th tax deadline that everybody knows about, is because these two are pass-through entities. In other words, they kick off a K-1 report to report to the individuals that own them that this is how much taxes you need to report on your personal tax return. Well, obviously, if these K-1s or these tax returns aren't done until April 15th, that doesn't give the individuals, the owners of the businesses, time to incorporate that into their tax return. So obviously, it's not a bad idea that the IRS has and says 30 days prior to personal tax return deadlines, we want these two tax returns done. so that everybody has plenty of time, 30 days, to incorporate those into their personal tax returns. So that's the name of that game. All right, let's go to the big one. Now I say up there April 17th instead of April 15th, and here's why. April 15th is still the normal deadline for tax returns, for personal tax returns, and also for C corporations. But in this case, in 2018, April 15th happens to fall on a Sunday. So normally you would say, all right, the next day would be Monday, which would be the 16th. But the 16th, District of Columbia, which is the government, has another holiday. So because they have a holiday, we all have a holiday. So instead of the 15th on a Sunday, it's not the 16th on a Monday. It is on the 17th, which is on a Tuesday. So tax returns for this year, 2018, are due on April 17th. And that's for personal tax returns, which is the Form 1040 or 1040EZ, or the C corporation tax returns, and that's the Form 1120. Because on C corporation, it does file and pay its own tax return. So there's none of that Schedule K1 or K1 schedule that flows to an individual. So the C corporation's got the same due date as a personal tax return. And of course, both of these, if you don't file the tax return on that deadline, you absolutely have to file an extension. Get the extension filed. That's an easy one to do, and defer, don't get into those penalties that you're going to start accruing. So April 17th, put that on your schedule. Now, we've gone through the extension times, so now we're towards the end of the year in 2018. First one coming due on extensions is September 17th. That's the extension deadline for partnerships and S corporations. And here again, the reason why they're 30 days before the personal tax returns, same reasoning, is that they need to have plenty of time to kick off that K1 to the individuals so they include that on their personal tax returns. So Form 1065 partnership, Form 1120S S corporations. If you didn't file it originally, if you file an extension, the deadline for that extension is September 17th. Don't forget that. And then the last one. Happy Halloween month, October 15th, 2018. This is the absolute deadline to file a personal tax return, which is your Form 1040, or the C corporation. So both of these, assuming they've been on extension, and you've got to file either the 1040 or the 1120. So don't forget either one of those. And that's the name of the game for deadlines to file your tax returns. You take care. Bye-bye.